Good afternoon and welcome to the end of day review for today. And today is Friday, May 17, 2024. And just 2 days after the CPI's release for this week. So that's what we are in terms of the Y. So if we finish the week 20, every Friday we finish the week of 20, and next week gonna be week at 21. And this week we also have the option expiration. That's the reason maybe you see that the action price very fluctuate today. But if you look carefully, you can catch a lot of good move right there for Friday. Not bad at all for Friday. So, but it's good idea that after a big win yesterday. Yeah, but we need to restrain. that's the good practice. But anyway, so yesterday is a retracement day, and today it also a retracement day. After how many days? After after CPI last week, right? 1, 2, 3. Here's the right here. So after 1, 2 is CPI right there. Well, not CPI, FOMC. 1, 2, 3, 4, and then is the non-farm payroll. FOMC, the day after FOMC, and then the Friday non-farm payrolls. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11-day rally, so the retracement is expected for Friday. I mean yesterday and today is retracement day. Anyhow, go back here. So we have finished everything. The only thing left for this week, excuse us, for this month is the GDP data coming at May 30. That's the only economic event that we expect. It's kind of medium, but it can be a high impact news, especially people looking for the how the economy do, but then how that gonna influence the Fed decision on rates right there. And then after that you go back to the non-farm payroll and the CPI next month, and also the FOMC. So that's in terms of time-wise and economic-wise. Okay, now we can go back to the chart to see how the price moving. All right. Before that, go to the low time frame. We look at the 4-hour time frame. 4-hour give us a very good perspective right here. So yesterday is the 13th right there. After a huge reversal right here, the reversal. You remember the Judah swing we catch yesterday at 11? That is Judah swing right there. 9:30 until 11 is show off right there. So when we look at the 4-hour time frame this morning, this is what we see. And then now we see a little bit more right here. Yeah. So right there, and we thought that, all right, so the sell side liquidity rate, so is this retracement and or complete finish, then you make an outlet up. That's the question that we have in mind. But up until now, we still don't know, even though it's after a huge, you can say it's double sweep sell side liquidity right there, then it reverse. But if we look, we try to find the glue, where it draw on liquidity, and It's not quite sure. So that's the reason why today is kind of a range there right there. It's not like clear clear cut example right here. You have expansion and then this retracement right there when the sell side liquidity will rate and then make expansion right there. Or we can say the same thing right here. Yeah, we know this setup, right? This setup is for bullish right there. Huge, just right the sell side and then boom. I think that the CBI data, this is Tuesday and then Wednesday when the data come. But on the PM it tells us right there. That's the setup that we are, we are the framework that we let's look at that framework again. Yep, so this is the framework we observe from the non-farm payrolls week, and then we have a CBI week right there. So looking for expansion, and then we see the retracement right here, right? And then we know that it's gonna be another expansion. And the same right here, we have expansion on the hour 13 the day before, and then you see when it goes to Asia, London, and then right before 8:30 you see the double sweep sell side with the right there. So in this case the double sweep sell side liquidity is taken care of by the second leg of candle itself, but in this case it's taken care of by the last doji candle, which is right here, by the same setup. The next framework we're gonna try to build is scenario number 2. So you have an expansion and you have retracement, and then it turns to a reversal. Yeah, we want to see that how that happened. Yes, so far we see this scenario: expansion, retracement, expansion, retracement, and expansion, second leg up right there. So please, retracement and second leg up. We need to find when the other case may happen right there. Go back to the ICT model where we see that the price delivery model, the right delivery model, all right, here's the price delivery model that ICT is developed. Basically start from consolidation, right? It go to expansion, and then from expansion it go to reversal. Retracement. Retracement, it can go to expansion again. Or it go from retracement can go to reversal. So that's the second scenario we're looking for. All right, that's the 4-hour time frame. All right, let's go to right here on a 5 minutes, a 15-minute time frame. So we see that the giant move is made around this 12:45. After that we have like a huge consolidation right here, expansion, and then it go to retracement here, but it turned into reversal, retracement and turn reversal. That is the second case that we're talking about earlier. This can be a case study for us right there. Yeah, the case study for it right there. So right here we have a big move, and it turns to reversal, retracement turns to reversal, and then it's reversal back right away. It's amazing how it works. Today we told you yesterday we blow up our account, so right now we just trade our paper account right there, but we take about 6 trade, and the last trade number 6 is very wonderful, because we go along right here. As soon as we saw this setup, you see that it break the level and test from below. That's twice, and then it's gonna expansion, it's gonna reverse. So it's a 4 breakout at that level. This is the signature right there of a reversal or 4 breakout. Let's take a look real quick right here. Alright, here's the setup that we have from last time, right? Whenever we see a 4 breakout, we have the setup. We have the first step is a break. In this case, it happened on April 29th, and you see that this has happened at the 15-hour break, and you see a retest from the below, and then from there it's reverse. Today we have a very similar scenario. I mean, almost identical, but the time a little bit different. You see that? It's also break at this level right there. It break the level, it retests from below. But for today, better, it retests twice. It retests twice. Yeah. So we little bit, when it retests twice, and we a little bit lose our patience. If you watch it in the real time, let's see what in the real time, you can see that we little bit lose patience right there. We doubt ourselves right there, but it hits our target. We aim at right here at the open, very conservative there. But actually, if we end right here at this level, if we hit it exactly this 2 level, yeah, that's our last trade we took. Let's see, go to the last trade we took. We did a recording, so let's see. Yeah, here's the last trade, the trade number 7 we took, right? When we see it break and then it retake from below, we're going right away. I think we do when it reached that level, we didn't do the buy market, buy stop. We do the markets order right away. We want to jump in right away. We just aim for this level on the Fibonacci 18, but actually if we aim at this level, it will hit also. So we see. So we trade the paper account. We trade the paper account right there. See, and then when we see is, wow, this is where we're a little bit worried. We say, wow, it retest from below 1 and it tried to break, but look like it fell. We come down ourselves right there, but we stay committed. We say, okay, let not babysit the trade. We walk away. The same thing happened when yesterday we just walk away, and it worked our way perfectly. And right here also, we a little bit, yeah, right here we say, wow, it should be explosive. Why not? And we a little worried. Yet, it come back. You see, we almost thought, wow, maybe we get it wrong this time, because it's maybe a second leg down gonna happen. But that's what our fear right there. But if you see that here, there's no cell switch whip right there. It will not be a second leg down. But at the moment, it looks scary, right? And yeah, let's see. That's also why we decided to walk away, not But you see, yeah, you see the explosion move, huge. Yes, see that? Right away, but he's gonna go up all the way there. Yeah, the target should be very conservative right there. So that's the final trade we took right there. The trade before that, we get a big loss because you know why? Right here we see a so-called engulfing candle, very explosive right there, and we think to ourselves, wow, let's look at the recording. Yeah, here's the trade that we took, the last trade we took right here. So as soon as we saw this setup, we're going right away. Right, huge breakdown, break the level, retest from below, then it's gonna reverse, and we take that trade, and we aim the target very low. We're supposed to aim a little bit high, but what happened to us the trade before? So we took trade aim very low right there, and we want to see how it's play out, and it worked. Right, a little bit nervous right here when it make a retracement. We're thinking to ourselves, wow, should we get out? This one's supposed to be reversal, which is explosive, right? That's the setup. Yeah, we start out ourselves. So wow, what's that? And then we hope, we have a hope again, and then wow, we're gonna explosive. But look, oh, now right here we're getting really nervous. We say, wow, what's that? It not happened to the plan, according to our expectation. Yeah, and then this one we said, wow, it's gonna be explosive. And at this moment we saw, what the heck is that? And we're thinking about maybe scratch the trade, get out. But we think to ourselves, let's see it out, and we walk away. Like a trade yesterday, we walk away, and it turned out a good idea to just walk away, because sometimes if we babysit our trade, we will get nervous and we close the trade before it's fully developed and it go into our favor. Yeah, look at that. Yeah, and now it's the explosive that we expect. Yeah, so you see, he's all the way up to level 53, 20 and 21 right there. So that's the last trade we took that make us a green day right there. Otherwise we'd be correct. By the way, we trade practice account for now. We have to wait for next one to get to the real account. So here's the trade before we take a big loss around here. Here the scenario we see low. Okay, so you see this candle gonna flip is at 12:45, and we thinking, wow, that's a huge deal right there. You see flip, and it become a giant engulfing candle, which is totally engulf this candle. And we thought to ourselves, wow, that's a bullish signal. Let's go in, and we go along right there. At that level, we go along. and we just aim for this, just 4 point right there, very 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 conservative target right there. But here's the mistake we make. Okay, this candle is supposed to break it. If not, then the next candle have to break it, the level around here. If too long, look at this candle, how much is it going down. And then we thought, oh, maybe it's just a retracement. And another reason is that we stay in the trade long is that because this is engulfed candle, and also we saw a fellow gap right here and fellow gap up, so we thought, wow, that is a balanced price range, right? And this one just retest that. Cool. Then just stay in the trade. And then right here the same thing happened. I said, wow, it flipped back, so it should be stay in the trade. You see that? But we feel something so wrong. We feel something, and we almost close the trade because we feel that there are part of us wants to stay in the trade. The part of us just get out. That especially when we see this candle show up very strange. You see, yeah. But we learn our lesson right there. So if we do that, the engulfing candle, and we see the retest around the balance price twice, and it not break up the little level, the recent level, then we got to get out, close our trade to minimize stop loss. Because after that, you see just a huge move out there, giant move right there. Yeah, so we learned the lesson right there. Our idea is right, but when we see that it invalid our idea, engulfing candle right here, then we need to get out when it failed to break. See, it tests 1, 2, 3, 4 times at this level, it cannot break. Then we have to get out. We cannot just stay in the trade too long. That's the trade that the trade before the last trade we took. We get a huge loss, about 2,000 something, and then last trade we got 3,000. So we end up with a green day right there. Yeah, let's look the trade we took before, trade number 6. Yeah, here's our trade number 6. So we go in. Yeah, we go in right there with 5 contract. And then when we saw, we add more. When we see it, we thought, wow, it's just a retracement, right? You're gonna make another second leg up. So we add more, 5 more contract. And then, yeah, when this candle flip, we add, yeah, when you see the flip, we add 5 more. That's the mistake we have. And we pay for that mistakes because this candle, after it touches the level, this candle is supposed to break it. If it down close like that, we better get out. And after this candle, it failed to break, then we better get out. At one point we are profits. We should get out right there. Yeah, we make mistake right there. Yep, we paid a low. Ooh. You see, this one we take out right there. Right, that we end up lose, 2,700 right there. But anyway, the last trade we took is cover loss right there. The last trade is so beautiful. It's the textbook of 4 breakout right there. Break it, test from below, and then it's gonna reverse. In this case, we test both right there. All right, here's another trade we take, and it's a 4 breakout. You see that? So it's break this level, and then it's retest from below at 53.20 right here, 53.20. You see that? So it break the level, test from below, and test from below one more time, exactly like this one. Test from below twice, then it's gonna break it. It break very explosively, but we check AM right here. If we AM a little bit high, we have more, but we check AM. We AM right here, we don't AM right there, and it go all the way there. So look, that's a very good setup right there. The other mistake, the other trade we make mistake, which is basically on the engulfing candle. We don't base on not on the 4 breakout. So we have to refine when the engulfing candle working. We have to be careful about that, because we pay the price for today. But look right here, you see that? The idea right there. As soon as we saw this up, we're going. Yeah, we put the buy stop right there. You see that? It tests this level from below twice, so it's gonna break it, and it did. It hit the target right there. So that's 2 good trade we do. We follow the setup. It break a level and it retest from below. It tap from below, and then it's gonna reverse. Exactly happened. The same thing right here. The trade we take right here, there's no setup. It's just based on the idea that it's engulfing candle. Yeah. Yeah. But where the target we're gonna aim? That's the issue right there. If we aim at this target, then this engulf candle we have to enter right here. We cannot just base on the engulf candle only. We have to target beside the level, and this level they hold right there. They don't let it break it yet. After they do this move, they will let it break it. But overall, it's good. It's great. It's great. For Friday. Friday, you don't expect much, but it's so beautiful. And another reason why this trade works so well, because you see that the open right here. And we know that today it's gonna be retracement day, which is a doji day right there. If we look on the the daily time frame, it's a doji. Then when you see it is below the open, you're gonna go in a buy. Exactly. And when it's above the open, you can sell them. Yep. So today. We don't see any Euro swing before 9:30 or at 9:30 or at 1 p.m. We don't see that, but we do see the Euro swing at 2 p.m. today, and then it reversed. That's a huge move right there. All right, it's Friday, so we want to keep it short. And we wrap up here. So we are thank you for your time and interest. We are always grateful for this opportunity, and we do what we love, and success is coming to our way. Have a good night, and see you next week. Bye for now.